Gold's 10-year winning streak looks likely to continue against a backdrop of increasing risk. Analysts polled by Reuters have boosted gold price forecasts for this year and next due to spiralling bad news on the Eurozone debt crisis and fresh concerns over the US debt and recovery.
Gold is establishing itself not only as a fear indicator or inflation hedge, but more or less as a new alternative currency, similar to euro and dollar. And we will not be surprised to see more of the central banks becoming aware of this fact and increasing their holdings for reserve currency gold over the coming months.
But there could be less investment interest poured into gold, and the price could slide if the debt issues ease on both sides of the Atlantic, and if central banks increase interest rates sooner rather than later.
If we do see those issues coming to some kind of resolution, or we see some kind of agreement being brokered between Republicans and Democrats in the US, and the situation in Europe calming down a little bit, then we could see quite a lot of the risk premium coming out of gold, and that could trigger quite a hefty correction.
Meanwhile, platinum and palladium prices will slow this year and in 2012, with palladium in particular struggling to replicate its stellar performance of recent years as the economic recovery remains stubbornly sluggish. Some analysts say palladium is still offering better value than platinum.
So I think it's only a temporary cooling down due to the fact that the palladium prices have been performing very strongly since 2009, and I would expect the prices of palladium to rise towards $900 or even $1,000 over the next years due to the stronger demand and due to the lower reaction from the mining production side.
As far as silver is concerned, market players remain cautious after very high volatility earlier this year. The grey metal is expected to average $36.60 an ounce in 2011, 21% up from the $30 forecast back in January. I'm Kate Jackson, and this is Reuters.